Hey everyone, welcome back to REIT Ball. This is M. Glad with Spurlock. We are back. It's been a
What's going
few
on?
weeks. It's been a few weeks since we've been connected on the same show. You know, I had to hold it down while you were going, Spurlock. How you been?
Man, I've been good. Took a little vacation, came back home, and now just been enjoying myself, ready to get back on the screen.
We don't allow vacations at REIT Ball, so this is one exception. One exception. I see you have a green screen for the folks who are watching on
Yeah,
YouTube. What happened?
I I had it all worked out. I figured it was season two. I was gonna step my game up, so I had this green screen and I had a huge Lakers picture going on in the background, and then realized when I got on camera today that it was lagging because the camera trying to adapt to the picture. So I got to figure out what's going on with that. Hopefully I'll get that figured out by next week. So this week we're just gonna do the green screen in the background.
I was rigging it. I was being a Laker hater, man. I made sure to put it on in the show. Yeah, so next week you got to get it figured out. And then meanwhile, my backdrop, my normal screen is going to I'm in transition, so I have to get it back up as well. But we'll be tight. We'll be tight soon. So yeah, we'll jump into. We'll talk about the market. We'll talk about the NBA news is getting exciting now in the playoffs. And then we'll talk about the three portfolios: the guest portfolio, Spurlock's portfolio, as well as mine. And the top performers there. So yeah, let's just get right back into it if you're ready. I don't know, are you rusty after vacation or are you ready to go?
Let's do it. The market update's up. Let's get into it.
All right, cool. So we'll start by talking about the REIT performance. So REIT performance this past week, if you look, they were all positive, which is good news. So we had all equity REITs up 2% overall. Infrastructure REITs were up where they were about flat. Residential was 2.5. Industrial was also flat, and data centers. The biggest surprise, though, out of everyone is lodging and resorts that were up almost 12% for the week. And we've talked about lodging. It's been beat up quite a bit. Every single episode, we talk about how bad it's been for hotel and retail. So they had a huge week last week. You know, my take on it, I think it's more of institutional investors from Wall Street. You know, it's been discounted quite a bit, maybe a short-term active trading strategy versus it being a true sign that, hey, hotels are back. If you look at year to date, because of the increase this past week, and there has been some strong performances with REITs overall, equity REITs as a whole are now in the red still, but only single digits. So they're down 9% year to date. And then the different property sectors, the ones that are positive, infrastructure is up 14%, industrial is up 12%, data centers up 31.7%, self-storage is up 2.4%. And what still shocks me a little bit is residential. You know, residential as a whole is down 16%. Although single family homes, we'll talk about that in a little bit. And then also healthcare REITs are still down 19%. Those two still, you know, I think that there's still opportunity for them to be performing a little bit better. So I'm going to keep my eye on those property sectors as well. So jumping in next to commercial real estate sales. So during COVID, they dropped dramatically. So all of the data that we talk about today are lagging. A lot of the economic data will lag a little bit because they have to, you know, collect the data, scrub it, and then we usually get it like a quarter behind. So a lot of this is July information, but commercial real estate sales during COVID obviously dropped dramatically. From May through July, the transactions dropped down 69% compared to the same time period last year in 2019. So that's a huge drop. New York City, specifically, their investment sales dropped 54% for the first half of 2020. You never think about real estate in New York slowing down. But
slowing down. Yeah, I was going to say a lot of that's probably got to do with just, you know, how everyone doesn't know what's going to happen. So no one's trying to buy commercial buildings.
Exactly. Yeah, and New York City was unique in itself, right? I mean, it was like the first one to get hit. Everyone moved out. Everyone was trying to figure out, you know, when are people coming back, both to the office and to their residence, right? So, and how many people are coming back versus relocating. So it'll be an interesting. It's definitely on the radar. It'll be interesting to see will New York fully recover and be the same New York pre-pandemic. Next up is single family homes. So single family home sales has kind of been the leader, the winner throughout this story of this economic recovery. Existing home sales were up 25% in July, which is huge.
Wow.
Almost every indicator in home sales has been promising and attractive. It's the highest sales level since December of 2006. Single family home renter, a lot of builders in the single family home space are kind of anticipating some renters, some families going from multifamily to single family rentals, or maybe they come from a urban market from a city and move to a suburb, but they rent instead of buying. So you're starting to see more single family homes being built to rent. The one thing that'll be interesting is, can they exit the portfolio? So if we're a builder and we traditionally sell the properties at the end, and now we're trying to rent them, and say we have, 100 or hundreds of single family homes, if you're a larger builder, are you going to be able to sell all of those, or will the buyer want to buy the kind of piecemeal it, like buy pieces of the portfolio based on what's performing the best? And are you going to have trouble, liquidity issues, trying to sell the portfolio as a whole, or will it be completely fragmented? So there has been some discussions about that, because it's not like multifamily where you're buying one property, right? They're scattered all over the place. So,
right.
That's going to be interesting. But overall, single family is doing well. And then new home sales has increased also by 13% in the same period in July. So both existing and new home sales have both increased. So if you believe in the single family home buzz, in this last screen, if you're not on YouTube, if you jump over to YouTube, Kent has a couple graphs for new and existing sales. But for single family homes, if you believe in the buzz, you believe long term, people are going to move less to the multifamily space and rent, and more into single family homes to get more space. Maybe more people are going to work from home permanently. Maybe they're kind of weirded out by the virus and want their own private space. If you're a believer in that, you can look at two REITs. One is AMH, and one, that's their ticker symbol, and then INVH. Those are both single family home REITs to consider. As far as multifamily new construction increased 55% in July. And then, Kent, I think you have a graph for us for rent collections that shows, we talk a lot about rent collections, and once the stimulus slows down, will tenants keep paying? What's going to happen there? So you can see it's an interesting graph based on income that we have on YouTube. So it goes from below 25,000 salary all the way up to 150,000 or more. And naturally, as the higher the salary, the lower the deferred payment and rent. So this is July data. So either people missing their rent, households missing their rent, or deferring their rent in July. So again, it goes back to, if you think about we talk about Class A, Class B, Class C. Really, Class C, as far as the tenant profile, as of right now, at least, it looks like the riskiest of the tenant profiles as far as collecting the rent. Now, that ties back into the new construction. I said increase of 55%. Most of the new construction mostly is going to go to the higher salaries, so they may not have to worry as much about rent collection as some of the older, more vintage assets like a Class C. Does that make sense?
Yeah, no, that makes sense. I mean, you're definitely the folks that are living, check to check are definitely taking the most hit. So that would
and on top of that, I mean, that's a lot. That's the bulk of the people losing their jobs.
Right.
It doesn't seem to be favoring them as well. If they pull the plug on stimulus at all, federal aid, like, there's going to be a world of hurt in that segment particularly. And then the last quick entertaining piece I have is Pinterest. If you're a fan, if you ever use Pinterest, they actually terminated their 90,000 square foot lease for $90 million. They had to pay a $90 million cancellation fee to get out of their lease. But I guess they thought, hey, it's not as bad as what they would have paid in their rent, right?
It must have made sense in the long run in order for them to agree to it.
That's a big check. That's a big check.
Yeah,
But
definitely.
I'll turn it over to you. Tell me what's going on. I've only seen bits and pieces. Now that my man Dame is out of the playoffs and Blazers are out, man, you have to feel me watching anymore.
NBA playoffs has been back. It left and now it's back again. So it's been a great 2 weeks so far. We had the Lakers recently just closed the series. We like to call that a gentleman's sweep. Portland won game one, and then Lakers came back and won the next four in a row. Like you said, Dame played in the first 3.5 games and ended up getting hurt and had to leave the bubble to go home to start getting prepared for next season. But the man, the myth, the legend, LeBron James showed out in round one. Bring up this image on to the folks on YouTube, that elimination game 5, LeBron 36, 10 and 10, Anthony Davis 43 and 9. CJ McCullough playing by himself was 36, 6 and 6, and we got to see Carmelo ball, which was great for a lot of basketball fans out there who have missed watching Carmelo. We got to see Carmelo in full effect in the playoffs. He didn't miss a beat. I think he's definitely ready to play again next year, so hopefully we don't have to wait too long through the season for him to find himself on a team. But that first series between Lakers and Portland was very exciting.
Definitely. I wish it was a little more entertaining, but it was good to watch.
Right. And then let's go over to the next series that ended recently. We had the Clippers versus the Mavs, which ended in the Clippers winning 4-2. It was tied 2-2 at one point. KP got hurt. Luka had to go by himself for those last 2 games, and last 3 games actually Luka had to play by himself. He won 1 and then lost the next 2, but Luka reintroduced himself again to the fans at home. We're going to pull up this diagram of just to show what kind of series Luka had. He put up 42 points, 28 points, a 13-point triple-double, a 43 points, 22 points, and then 38 points to close the series. He averaged 31, 10, and 9.
Wow.
So Luka is here to stay. A lot of people have Luka in their top 7 in the NBA right now. So that's pretty good for someone who's only 21 years old.
Absolutely. Yeah, he balled out for sure.
So let's move over to the Eastern Conference, which is currently in the second round. We got the Celtics, who have just recently beat the Raptors again, so they're up 2-0. The Heat have beat the Bucks, so that series is 1-0. So the reigning Defensive Player of the Year, most likely MVP in Giannis, is down 1-0 against the Heat. I think the Heat matches well against the Bucks. Giannis is one of those players where if you take away the key, he really can't do too much because he has no jump shot. He recently, I think yesterday, scored 18 points. He's horrible from the free throw line too, so that kind of hurts him at the end of games. So it's gonna be interesting what happens in that series. The Heat actually beat the Bucks twice in the regular season. So although the Bucks are the number 1 seed, Jimmy Buckets is what they call him, is out there balling.
Yeah. No, I remember you said Giannis was struggled from outside, his outside shot when we were interviewing Equinix. So it seems to be holding true.
Yeah, it's definitely showing. It's definitely showing right now.
Even though I feel like Equinix and Mr. Myers, his team, they'll probably step up a little bit more than Giannis did in this first game.
Oh, for sure. Data centers are definitely still rocking. So definitely shout out to them over there. Definitely appreciate you coming by to the show. Hopefully we can have you again. But that takes us to Game 7s. We have Game 7s going on in the Western Conference. We have the Nuggets versus the Jazz, who are playing tonight, and we have OKC versus Houston that are playing tomorrow. Some more young talent on the Nuggets and Jazz between Murray and Mitchell. These two have been going at it all series. I got a diagram I'm going to bring up to just give an example of kind of what they've been doing. You have Mitchell game one, 57 points. Murray game one, 36. Mitchell 30, Murray 14. They both putting up 50 twice in this series. They both putting up 40 in this series. They both put up 30 in this series. So it's been an interesting series to watch between these two young superstars who are really making their name in the NBA right now. A lot of people have questioned where these points are coming from. I mean, this is not something Murray was doing during the regular season. I mean, the talent's always been there, don't get me wrong, but Murray averaged 18 points in the regular season. So I think my personal opinion is the no fans is really working for the young players because it reminds them of high school. It reminds them of AAU basketball where you can actually hear, the squeaks on the floor when they're dribbling. So I think they're getting in rhythm because there's no crowd.
Interesting. No, that's interesting. Yeah, I didn't think about it. That's real interesting. Maybe. Oh, less pressure.
I mean, if you look at the field goal percentages across the board, it's these numbers are ridiculous and are not normal. You got folks shooting 65% while putting up 50 points. That's not normal basketball. I mean, it's great basketball to watch. Don't get me wrong, but I think a lot of it has to do with what's going on in the bubble.
Cool. Well, is that the update for basketball for now?
Yeah. That's going to wrap up our basketball. Starting next week, we're actually going to assign. We wanted to wait till these game sevens got over with, and then starting next week, we're going to actually assign basketball teams to the portfolios. So depending on who is top performers and whatnot, we will go ahead and discuss those teams based off of who's left in the playoffs.
Got it. Yeah, that makes sense. I know you're going to try to have the Lakers as one of the portfolios, but
for sure.
Probably your portfolio. But so I'll jump into the REITs. I'll jump into the performance. So thanks for that update. The guest portfolio last week gained 3.39%. Spurlock's gained 3%, and mine gained 2.73%. As far as the top performer in the guest portfolio, the top performer was RLJ Lodging Trust. RLJ Lodging Trust, and the ticker symbol is RLJ. They actually, this week is interesting. All three REITs that I'm discussing are all lodging. It's like I said, they had a killer week last week, and that held true for our portfolios. So RLJ Lodging had a 11% increase this past week. It was interesting because I actually got to listen to an interview from RLJ CEO, Leslie Hale, who, by the way, is a Black female, so diversity × 2 in that scenario, diversity squared, which is interesting and very impressive. But they have a market value of $1.58 billion. They're headquartered in Bethesda, Maryland, and they actually IPO'd in 2011. And they currently, the interview is interesting, and it makes you think about what's going to happen with hotels? How should I play hotel REITs and things like that? And her perspective was the pandemic reassured them that they had the right business model long term. And the reason why I say that is they're not really a luxury hotel. They do brands like Courtyard by Marriott, Hyatt Place, Hilton Garden Inn, Embassy Suites. So they have, in some cases, full service, but really it's like watered down a bit. So they don't have all the bells and whistles, amenities. They don't have as much meeting spaces like some of the luxury hotels. They have less staff, so they're running a leaner model. So it helps them a little bit, even though they're also, struggling with hotels as a whole. But it doesn't hurt as much when you have less staff and you're running a leaner model. So that was an interesting point that she made in her interview last week. And so they operate over 100 hotels, 22,000 rooms in over 20 states. And since they had to obviously close down during COVID, but since then they've reopened 21 hotels in the second quarter and then another 15 hotels in the third quarter. So they're reopening, which is good. And the property that I'm going to talk about today is Courtyard Waikiki Beach. So I think this is actually one of their nicer, not that any of them aren't nice, but like one of their nicer kind of resort type hotels. So it's in Hawaii. It's 400 Royal Hawaiian Avenue. That's the address. It's a 24-hour fitness center, a spa, and 2 pools. And you can't, if you're not on YouTube, hop over. You can see that property. So if you were interested in owning hotels, I don't know right now if it's the best time right now, unless you have maybe a long-term hold and you can get these at a discount because they are still down year to date quite a bit. All the lodging REITs. But you can, own something like this, a picture like this in Waikiki. So the next one, and they're flat, their dividends, they have, 0.5%. And right now hotels aren't really paying dividends. So I wouldn't be too concerned about a dividend play for any of the lodging. And then the next one is Spurlock, your portfolio. Your top performer, also lodging and hotel, with Sunstone Hotel Investors. Ticker symbol is SHO, and they had you had a 10% gain this past week with SHO, and they have a market value of $1.81 billion. We do have an image up. The property is the Renaissance, Washington, D.C. that I'll talk about in a minute. So Sunstone Hotel Investors are located or headquartered in Irvine. I'm sorry, I don't think I mentioned that RLJ is located in Bethesda, Maryland. First one I mentioned. So Sunstone Hotel is located in Irvine that own approximately 20 hotels. So, $1.8 billion value or market cap versus 1.58 that RLJ had, but they own less hotels because they focus on more of the upscale hotels. They have the Marriotts, the Hiltons, the Hyatts, and they do a heavy value add in the renovation. They really like to reposition the asset. That they go in and do and put a lot of money into it to get it in upscale and very nice. And then they IPO'd in 2004, and they have a long-term strategy. So their long-term strategy is the heavy value add, as well as just increasing the operational efficiency of the assets, and over time reducing the leverage. We talk a lot about leverage, debt, what that does for the balance sheet. That's their long-term play. And the markets that are contributing the most to their revenue are San Diego, Hawaii, Boston, San Francisco, DC, and Florida. And over the past 10 years, they've acquired about 10 hotels, so almost one per year. Again, the property that we're talking about is Renaissance, Washington, DC. It is on, the address is 999 9th Street, Northwest. Very easy to remember.
Very catchy.
Yeah, if you're ever in DC or family and friends in DC, this is something that you could own. 807 rooms, 65,000 square feet of meeting space. It's in a high growth corridor, a few blocks from the White House as well as the convention center. And then again, if you're not on YouTube, hop over so you can check out that property. Really nice property in DC. And then the last one I'll talk about is my portfolio. And also lodging, top performer, 12% for the week. So mine was 12%, yours was 8% as far as the top performer, and the guest portfolio was 11% out of the three lodging REITs. My REIT was Park Hotels and Resorts. The ticker symbol is PK. So they're headquartered in Tysons, Virginia, which is essentially DC area. Mm-hmm. They have a market value of $2.27 billion. So they're the largest of the three that we're mentioning. They were formed in 2017 as a spinoff from Hilton Worldwide. And in 2018, they sold 13 non-core hotels, including 14 of its 14 international hotels for $519 million. That was in 2018. In 2019, they acquired Chesapeake Lodging as part of their expansion strategy. They completed that transaction for $1 billion in cash plus $978 million in stock. This added 18 hotels to their portfolio, and it further diversified their hotel portfolio. And it added brands like Marriott and Hyatt. And then they sold another last year. They sold another 10 hotels, and between last year and this year, and now they have a total ownership interest in 60 hotels, and other hotel brands that they have in their portfolio are DoubleTree and Embassy Suites.
Okay.
So the property, the image that you have up right now is a Waldorf Astoria hotel. It's in Orlando, Florida, and it's actually part of a larger Bonnet Creek resort. So it's right on the southeast corner of Disney World, and it's a 70-acre. That hotel is part of a 70-acre development. So the Waldorf Astoria hotel is 502 rooms, including 171 suites, and it has 42,000 square feet of meeting space. They do a lot of conferences in Orlando, so that makes a lot of sense. They have 12 restaurants and lounges. They actually have an 18-hole golf course. So if you're a golf lover, not only do you own this hotel, but in the portfolio in the REIT, but you have a little golf exposure as well. And they had an award-winning spa, 24-hour fitness center, and the address is 14200 Bonnet Creek Resort Lane, again in Orlando, Florida. So that's the hotel that's part of Park Hotels and Resorts. So once again, Park Hotels and Resorts, ticker symbol PK. That was my portfolio, or that was my REIT for my portfolio, top performer. Sunstone Hotel Investors for Spurlock's portfolio, SHO. And the guest portfolio was RLJ Lodging Trust. All three lodging REITs, all in the double digits this past week for a game. Now, again, I don't think it means the recoveries. Don't get too excited with lodging. It's something to look out for. But again, if you're doing a long-term play, at some point you may want to consider hotels.
So I guess the most important question here is, if I invest in Park Hotels, do I get an early tea time?
That's a very good question. Maybe you should just go in demand. Cut the line. Cut the line. I own this place.
I own part of this.
I own it. I don't need to pay for golf. One interesting piece I didn't say before I transition over back to you is their dividend is insane. I mean, they're not paying right now, but their dividend leading up to this was like between 18 to 20% dividend yield.
Wow.
Yeah, that's it. But it goes back to saying, hey, that high dividend yield doesn't always mean anything, especially during tough times. So with that said, you can close it out with your last piece, and then I will give my final thoughts.
Definitely. I mean, it's been a long, sad month. I mean, year. 2020 has definitely been something else. We lost two more great ones in the basketball world within the last week. So I just wanted to take time to pay respects to them. We had Mr. John Thompson, coach of Georgetown for a long time. Growing up, a lot of minorities looked towards John Thompson and Georgetown as a lot of people thought Georgetown was a HBCU growing up, just because John Thompson was there and what he made that college look like. And then we also lost Cliff Robinson within the last week, 18-year NBA career vet. I want to say he's like top 5 in most games played. Just a random stat that I heard, I think, the other day. But John Thompson and Cliff Robinson, rest in peace to the both of them. And then also the Arizona coach from the 90s, Lou Olson, that's his name, passed away as well. So rest in peace to all three of them.
Cool, definitely. Thank you for that. And then just my final thoughts very quickly. As a Main Street investor, retail investor, listeners, just be careful with the markets. They're soaring through the roof, but fundamentals, I just don't get it. We have obviously a high unemployment rate. We have a lot of uncertainty still. I get it that the professional, the kind of higher salaries have not experienced as much of the layoffs and all those factors. But I just don't know if at some point this comes, this adjusts. So don't just blindly invest in the market saying, hey, it's rallied through, the worst is done and we're on to a sweeter place. Pick wisely, do your research. We hope this helps. Don't try to be an active trader and try to beat the market. You won't win. And anything that we tell you or try to inform you about REITs, a lot of what we're doing is talking about long-term strategies, right? Like investing in something you believe in, that you like the management team, you like their strategy, you like their balance sheet, and long-term, see the growth from your portfolio over time. Just don't get caught up in the real-time news, because usually once the news is released, it's too late. So just be careful there. But those are my final thoughts.
Definitely.
Well, great. I think that wraps it up. Like we said, this season we want to have shorter ones, and then in between we'll start having those building blocks of REIT lessons as well. We hope this was good information for you. The theme today, hey, it's about lodging and resorts based on the performance last week. So you heard a lot of that and some exciting stuff going on in the NBA. But with that said, Spurlock, thank you for rejoining. We're glad you're back. Look forward to next week having another episode. And until then, REIT ballers, take care. Stay tuned for the next one next week. Take care.
Everybody like, subscribe, and share. Like,
most
subscribe,
important.
and share. Most
That's why we
important.
have you on here, Spurlock, for the most important stuff. All right.
Thanks, everybody.
Take care, everyone. Bye.
Bye.